What is up, everybody? Welcome back to another episode of Bitcoin and Markets. Today is FOMC day, so we are going to be waiting for that to drop here in the next couple of minutes, and I'm going to live react to that. The consensus view is of a pause. Let me pull up the CME tool, sharing my screen. Where is that? This is the CME FedWatch tool. We named our podcast before they named their tool, but it's showing 98.8% that it will be a pause. And I've been waiting for this moment. If you guys have been listening to my content for a long time, you know I have been calling for a pause a long time ago. I didn't think that, I thought the deflationary pressure that we're seeing today manifest in CPI, PPI, bank lending, all of that stuff, recession in Europe, recession in China, that would have happened sooner. But of course, that wasn't the case, and we've been kind of waiting for this pause to happen. Well, people are thinking that when they do pause, let me switch over to the website. When they do pause, then it's going to be a major risk on for stocks, for Bitcoin, for all of these things. Let's take a look at the Bitcoin chart. We have 2 minutes until the announcement. Bitcoin is up slightly on the day. This is a very compressed period here. It is still kind of looking like a bear flag. There's a lot of confusion in the market. Let's go down to the 1 hour, and let's just go down to the 5-minute for this reaction. Okay, let me go to the FOMC website. We should see this populate. Still nothing. Got 1 minute till the initial, or till the drop. Yeah, so I'm thinking that we're going to see a pause. They won't disappoint the market. If they hike, it could be disastrous. And the market is also showing a mixed signal for next FOMC. You can see that one comes in at the end of July. So we'll see. But overall, the market is saying that by the end of the year, rates will be lower, so that they will have to cut before the end of the year. Still nothing on this website. 1 minute to go. Guys, I am live streaming on YouTube, Twitter, Rumble, Twitch, and Telegram. Home base is Telegram. You can join that, t.me/Bitcoin and Markets. Website is bitcoinandmarkets.com. You can sign up for free notifications and my free weekly newsletter. You can also support the content over there. This is a listener-supported podcast, pretty much completely. Okay, let's see. Oh, it has dropped. Let's bring this up. And we have maintained the target rate. So they did pause. This is incredible. Let me read this out here. Recent indicators suggest that economic activity has continued to expand at a modest pace. This is boilerplate. Job gains have been robust in recent months, and the unemployment rate has remained low. Inflation remains elevated. Okay. Year-on-year inflation remains elevated, and also depending on what you look at for unemployment. Okay, this is the problem. The central bankers, they have these models. They have these specific variables that they look at, and the reason why they're unable to predict anything is because they're looking at the wrong variables. They're concentrating on the wrong things. But anyway, that's not about it's also, do they even want to predict these things, or do they want to just set their messaging up? I've said that they don't want to pivot too early, because then it'll be seen as if their pivot didn't matter. If they pivot and the market still crashes, which would be the case, then their pivot doesn't matter and they're impotent. They would rather make it look like they crashed the market by doing too much. But here we have a pause. The U.S. banking system is sound and resilient. More boilerplate. Tighter credit conditions for households and businesses are likely to weigh on economic activity, hiring, and inflation. The extent to these effects remains uncertain. The committee remains highly attentive to inflation risks. The committee seeks to achieve maximum employment and inflation at the rate of 2% over the longer run. In support of these goals, the committee decided to maintain the target range for the federal funds rate at 5 to 5.25%. Holding the target range steady at this meeting allows the committee to assess additional information and its implications for monetary policy. In determining the extent of the additional policy firming that may be appropriate to return inflation to 2% over time, the committee will take into account the cumulative tightening of monetary policy, the lags with which monetary policy affects economic activity and inflation, and economic and financial development. So this is getting into more boilerplate again. In addition, the committee will continue reducing its holdings of Treasury securities and agency debt and agency mortgage MBS as described in its previously announced plans. The committee is strongly committed to returning inflation to its 2% objective. Okay, so they continue QT. That's one of the things that people are talking about as well. Does QT matter? They're not selling anything. They're just letting stuff mature off their balance sheet. But this is the big 5 to 5.25%. They have paused. Let's go to the charts. All right. Bitcoin is going crazy here. Let's go down to the minute. Big Darth Maul candle there, all the way up to 26,080 and down to 25,900 and about 30. So pretty big swings here. We're getting some volatility going on in the Bitcoin price. Let's go to the stock market. S&P 500 selling off hardcore. That's very interesting. A pause should be bullish, but I've said in previous of these live stream reactions that the initial movement is usually the opposite direction. So we'll have to wait and see how this develops. Selling off pretty good. Let's go to the daily and see how it's looking. I mean, there is zero damage done to the daily stock market chart at all. Let's check out the 10-year. 10-year is not reacting. Oil is one of these stories that nobody has gotten right for a very long time. It's extremely weak despite the supply constraints. And I've been watching a lot of Lynn Alden stuff today because the guys on Telegram know what I'm talking about there. But her calls and many calls were for higher commodity prices. Inflation takes the inflation that we experienced the last couple of years took prices up higher to a new higher level. And so she expected commodity prices to continue to accelerate in a cyclical fashion. This 15-year bear market for commodities, now we've entered a 15-year bull market, but that has not been represented at all on the charts. So just a heads up on that. Dollar is bouncing. It looks like kind of sold off earlier today, bouncing back up into the 103 handle. Let's take a look back at Bitcoin. I mean, on the daily chart, it just looks flat, flat, flat. It doesn't look like there has really been any reaction to this FOMC drop. But guys, we are living through history right now. I said Powell wanted to pause. The economic numbers are not that bad. Like a lot of people are talking about, PPI and CPI and stuff, showing that inflation is over. We had the banking scare in March and April. I'm not saying that the banking scare is completely over, but it does look like as if that has been swept under the rug for the time being. Of course, what usually happens, and Jeff Schneider talks about this a lot, just because you don't see the flames doesn't mean that the embers aren't still going. I don't know if he uses those exact terms or anything, but the embers of this banking crisis are still burning. And it's just a matter of time when they flare up again. And they tend to be seasonal. That's why it happened around the end of Q1, and it will flare up again around the end of Q3. So just be prepared for that. But overall, this year, we've seen higher Bitcoin, higher stocks, and higher bonds. Just the opposite of 2022. All right. What else? Let me see if I can see any comments on this. I can't really... I'm not good at the streaming software yet, but there are no comments. So let me see. Telegram, if you guys have any comments, you can put them in the comment section for this live stream. I'll bring that up. The Bitcoin price here continues to sell off. As I said, the initial reaction tends to be the opposite of how it eventually ends up for the day. So if we see this big sell-off happening right now, it will probably reverse. That's my guess. It's very hard to trade these periods. I don't recommend trading on leverage. The 1 hour chart looks kind of sick, guys. It does not look good. But we could like put these a little bit more horizontally, you know, something like this. So we're watching this. Let me see if I have any more comments on this. Of course, Powell will be speaking at 2:30. I'm not going to hang out until then, but I will be live chatting on Twitter and Telegram. So again, you can join the Telegram, t.me/Bitcoin and markets. This pause is not a surprise. After yesterday's CPI that I also live streamed, I was convinced almost immediately that this was going to lead to a pause. And if you go back and listen to that, right when my second sentence after I saw that the CME came in under forecast, I said, oh, they're going to pause. This wasn't inflation. This whole period was mainly a supply shock and deglobalization. So it's going to be hard to tell what inflation is because, first off, the definition of inflation that we don't like, that is detrimental to markets, is money printing, right? The net, or it's not necessarily money printing, it's an increase in the supply of money. And that causes, the secondary effect is that causes a general rise in the level of prices. And Mises said that it's inevitable. So if you have an increase in the money supply, you inevitably will have an increase, a general increase in prices. So people have been waiting this whole QE era and all of this for a rise in prices that never really manifests itself. Let me stop sharing here for a second. So the inflation never really manifested itself. After the great financial crisis, we had very low growth and low inflation. And then we had the supply shock of COVID. It was actually turning into a recession. It was in recessionary territory prior to COVID. All of 2019 was sliding. And then COVID hit and we shut down the global economy, shut down global supply chains. We were already starting to deglobalize slightly in 2019 even. I mean, the trend of what's it called? De-Chinification, of your supply chains. That started back in the mid-teens, some companies. And it just picked up pace dramatically during COVID. And so you have this deglobalization effect where people are going to choose slightly higher prices that are less risky. See, the globalization and the growth of the last, say, 50 years, 30 years for sure, it was a false feeling of a false sense of security. And so the risk to supply chains was underpriced. They said, oh, we can save pennies outsourcing. And there's no risk. Like, where's the risk? But of course, now we realize that we had been underpricing risk. And so globalization does not make sense. It does, at least at the levels that we had it. So we are going to deglobalize naturally as supply chain risk gets priced in. And that will cause prices to rise. So Mises didn't say that all general price level increases are a result of money printing, the reverse backwards deduction. He said no, that a increase in the money supply will inevitably lead to higher prices. But if all we have to go on is the price level, because we have negated everything else, we can't use M2 because M2 didn't result in a corresponding rise in prices. So we have negated M2 from our logical data set or our data set to do these problems here. And so now you're left with we have price increases 2021, 2022. Why did that happen then? Well, it happened because of supply chains. So we could see higher price levels with lower commodity prices. It's just that the process to make the same amount of goods is more expensive. And that is going to cause trade-offs. That's going to cause demand destruction and everything. So this is all part of the end of a credit cycle. As we deglobalize, as we realize the risk of globalization, we will start also to, the credit markets won't make sense either, because we have been underpricing the risk in credit markets because this false sense of security that we had for the last 30, 50 years. So as all of these costs get priced in, the price levels will be higher. We will be generally less well off. And all of these people that think that, all we need to do is get rid of the evil United States and their exploitative system are in for a rude awakening, because without the linchpin of the global financial system and the globalized system, the rest of it falls apart. China cannot exist without a globalized system, and this system is going away. Credit is going to be tighter. This actually a deflationary scenario. So we can have deflation and rising prices. That's what it comes down to. But anyway, so getting back to this Fed Open Market Committee, let me share the screen one more time. I will be going over this more in detail and the reactions tomorrow on FedWatch, of course, with Bitcoin Magazine, 12:30 Eastern. Don't miss that live stream with Bitcoin Magazine. But the FOMC have said that they are going to maintain the target range for the Fed funds at 5 to 5.25. I would love to see what the markets are going to price in for the next rate hike or the next policy decision in July. Some metrics before this were saying that probably hike one more time, but by the end of the year, they would have to be cutting. Maybe they'll be cutting sooner rather than later. Now, this also is not a stimulatory effect, because you have to pause or cut because the economy is starting to slow down. It's the opposite, cause and effect. Most people think the cause is the cutting of rates and the effect is stimulus. But that's not the case. It's the falling economy is the cause, and the pause and the rate cuts are the effect. So this just tells you that the economy is starting to return to that zero growth bound. Real GDP is approaching zero, and they're worried that we're going to enter a recession. And so that's why they will pause. But okay, let's get back into the charts real quick before I let you guys go. Again, I live stream a lot of these reactions to the CPI and to the Fed all the time. Bitcoin is kind of just chilling out, 25,843. Nothing big has changed. We'll see if I'm correct that the initial reaction will be reversed. Let's go to stocks. And we have it on the 1 hour chart here. And stocks have sold off significantly, but we'll see what happens. It did come down here and close this gap from back here. So this gap has now been closed. And we'll see if once that has now closed, that we can rally now again. But anyway, none of this changes my fundamental base case for the next couple quarters. Bitcoin should rally, stocks should rally, bonds should rally. And then end of Q3 is the next seasonal period we should look for trouble in the financial system. All right. So that's it, guys. Check out bitcoinandmarkets.com. That's the home base. Support my content if you feel like it. This is a listener-supported show, and I appreciate everybody that does support. I will be getting a Market Pro newsletter out. That's for my premium subscribers. I'll get that out here by the end of the week. Appreciate you guys supporting at that tier. And that's going to do it, guys. Thanks. See you on the next one. Bye.